Welcome back. Let's get another corporate conversation going. We've got the management of V-Mart with us, Anand Agarwal, the CFO of the company. The company has reported a muted Q3. The top line growth was only 12.3%. This compares with a 55% revenue growth in the first 9 months. So in Q3, things slowed down. Margins too saw a drastic drop. From 19.6%, margins came down to 13.4%. So that's a more than 600 basis points year-on-year decline in the company's EBITDA margins, and that drove a 65% drop in the company's profitability. The question now is, have things improved as we kickstart a new calendar year? Anand is with us on the show now. Anand, that's the question, right? How has January and the first half of February been? And if you could share some numbers in terms of same-store sales growth, the footfalls, the conversion, what would the comparable numbers look like for the first half of Q4?
Hi, good afternoon. I think definitely the performance is getting better. We are seeing better like-to-like growth. Obviously, the last year, January, we had the Omicron scare, and therefore the numbers may not be strictly comparable. But definitely coming at the backdrop of Q3, we are definitely seeing better traction and better footfalls. And also to comment on the Q3, in fact, while the numbers may look slightly down, but that's more because of one-time expenditure that we did around a recent acquisition. But otherwise, for the core business, I think the business remains fairly strong and robust, and we continue to make more inroads into developing more new stores so that we can keep pace on the future growth as well.
Okay, so that is about demand situation. Can you tell us what's happening with margins? Because EBITDA margins have dipped to around 13% versus 20% levels earlier. Going forward, FY24, the last quarter of this financial year, how much can margins improve?
So margins, as I said, for the core business remain the same. They're not particularly way off. I think what we have done in the last quarter is that we have incurred certain one-time expenditure around certain acquisition that we did, particularly around LimeRoad.com, and that is impacting the margins for the quarter. On a go-forward basis, definitely there is some pressure on the margins because we will keep maintaining some pressure, having some pressure as far as the lower income customer spend is concerned. We are still seeing some pressure because of inflation, because of which we had to reduce our pricing a little bit, and thereby the pressure on the margins might still be maintained. But on a go-forward basis, I think for the next financial year, we are quite hopeful that we should see normalcy coming back soon.
What's the extent of price reduction due to lower income consumer spend?
Yes, because we basically...
No, what's the extent?
So that would be roughly around 5 to 6% that we would have tweaked the pricing and the product mix to cater to the more footfalls from the lower price segment.
Sorry, and this 5 to 6% price reduction or tweaking that you've done caters to what percentage of your portfolio, or it's across?
It's across.
It's across. And is there any visibility of increasing prices or further reducing it from these levels?
I would not say, Rima, that we would have reduced prices. What we have done is that we have introduced more products at the lower price points so that the availability for the lower price point seeking customer becomes more.
Okay.
Thereby, the mix of the product that we sell is slightly more at the lower price points, decreasing the average selling price for the company in general.
Okay, so the product mix is now more towards the lower price product, and therefore the blended average selling price of V-Mart has come down by 5 to 6%. Do we see more integration related expenses for you in the subsequent quarters? Because I know in Q3 there was a charge of about 36 crore. Would there be a similar number in Q4?
Not really, because this was a large part of this was one time, around 12 crores out of this was one time. So that would not get repeated.
And the balance 24 crore, because in Q3 the expense was 36, 12 crore of that is one time. So what about the balance 24 crore of integration costs?
Yeah, so that's not really integration cost. That's a normal OPEX cost, which we have got, added on because of the new business that we have diversified into. Which is the online e-commerce marketplace business, and that's still in an investment phase, and we will invest roughly around 20 to 25 crores as far as loss funding is concerned towards this business in the next quarter as well.
Okay, thank you very much, Anand. Great chatting with you always. We get a lot of insights about what's happening at the lower end of the economy. So thank you very much for joining in and wish you all the very best. By the way, Adani Enterprises numbers are flashing for you on your screen. That was the other big number that we were tracking today, and there has been a big jump in the numbers. We only have the basic numbers. Revenue growth of 41.9%, EBITDA margins at 6.1, which compares with 4.1%. So 200 basis points improvement in the company's EBITDA margin, and the net profit this time is at 740 crore. Look at the stock price reaction. The stock price was actually in the green, it was in the red, and now it's spiked up. It's managed to recover 8% from the day's low and is now back in the green territory. Adani Enterprises has recovered all its losses and is now up close to about 1.5%. The numbers will get flashed for you on your screen. Adani Enterprises has reported their Q3 numbers and the street seems to like it. Get into a break on that note. We wrap up on Midcap Radar. On the other side, mutual fund corner when we return.